Start your day with It's the Business. Here's Phil Dobbie.
Good morning. Well, today it's great news for nomads.
No, I'm not homeless. I'm just houseless.
Yes, Nomadland wins Best Picture. Just imagine how annoyed that woman would be when she learns that because she's houseless, she's missed out on all those stimulus payments from the government. Plus, the most inconsequential deal of them all.
So that hopefully we'll be in a position to sign a deal in early June.
That's Australia's enigmatic trade minister talking about the UK-Australian trade deal, the impact that that will have on us. Not much is the answer, other than perhaps cheaper Tim Tams, which, by the way, are the most delicious chocolate biscuits in the world. Plus, more trouble for the former head of the post office. And Rodney Hobson is here with more share advice. And what do you think of this?
It's interesting. What's cropped up this week is that there's no retailer among listed companies, and I'm not just talking about the FTSE 100, no retailer among listed companies that has a female chief executive. Now, when you reckon that even in this day and age, about 80% of purchases are still made by women, you might think that it's about time we had women running companies. You think that perhaps women have more idea what the shoppers want.
Although, do you think a woman who's the CEO of a listed company still has time to go and do the shopping? It's Monday, the 26th of April, 2021. Good morning.
And now, it's The Business, making sense of it all with Phil Dobbie.
Yes, Hollywood has chosen.
You are one of those lucky people that can travel anywhere.
Yes, ma'am, I know.
And they sometimes call you nomads.
My mom says that you're homeless. Is that true?
No, I'm not homeless. I'm just houseless. Not the same thing, right?
No.
Yes, this morning's news is that in the Oscars, Nomadland has been voted Best Picture by the people who decide these things. It's all about a woman that loses her job, packs her bags and starts a nomadic life in America. A movie in which not much happens, as you can imagine, as far as I can tell. I think we've all been watching it because it really is. It's a fantasy movie, isn't it, really, at this stage? You know, to actually get out of the house for any more than a trip to the supermarket. Maybe that's why it's done so well. And Paula Vennells this morning is likely to step down from the board of the retailer Dunelm. She was the CEO of the post office. And, of course, we had that wrongful arrest of hundreds of post office workers, and maybe wrongful imprisonment for some of them as well, because they had that flawed IT system that Paula Vennells instituted called Horizon. Basically an accounting package which led to the prosecution of 700 postal workers for false accounting and theft. But it looks like actually, and some of these people were trying to save their jobs by putting their own cash in to try and cover errors, which actually may have been a fault of the software, the accounting system itself, that had a bug in it. So there we are, wrongful arrests. In fact, into December 2019, the post office agreed to settle with 555 claimants over being wrongfully charged. So it's not been a fantastic career for Paula Vennells, has it? Who's also announced today she's stepping down from her role with the church. So who knows what she's going to do now? A quieter life somewhere, perhaps. Maybe she'll become a postmaster, a sub-postmaster somewhere for a quiet life. What would you do if you wanted a quieter life, if you wanted to escape everything and just go somewhere where no one could find you? I've often thought about that. I thought, well, maybe what I'd do is I'd just find a quiet community somewhere and chip away, earning a living where no one's going to find me, maybe doing a daytime shift on a BBC local radio station. No one's ever going to find you there. Excellent news. We might have a trade deal with Australia by June. Talks last week went particularly well, apparently. Here's the enigmatic Trade Minister for Australia, Dan Tehan, who's been over to the UK last week.
We were able to make significant progress on the negotiations, and we're about to embark on a sprint now where we will meet with our chief negotiators every Friday now until the beginning of June, so that hopefully we'll be in a position to sign a deal in early June.
Not much inflection in his voice there, is there, from Dan Tehan? And it's obviously massive news. Not. This deal, if it's done, and this has been talked about for so long, hasn't it? Basically since Brexit. This is one of the things we can do now we've got Brexit. It could boost the UK's exports to Australia by £900 million, which based on 2019 figures would mean we would see a 0.2% increase in our exports. 0.2%. That'll help with the 23.4% reduction in our exports to the EU since the end of last year. So we'll only be 23.2%. Not 23.4% behind on our trade because of this marvellous 0.2% we're going to bring in from Australia. Meanwhile, Australia hasn't said how much is going to impact them, what are the positive benefits for them, because, I don't know, maybe they don't deal with such small fractions like we do. Although there are a couple of stumbling blocks on the road for Australia, so maybe they need this deal because first of all, they're upsetting China for speaking out against the regime's approach to human rights and the like. And then Joe Biden now proposing a border tax on imports from countries and goods that don't meet the US's environmental standards. Now, that could mean, given that Australia fails on almost everybody's environmental standards, that could mean tariffs on goods from Australia going into the US, unless Australia suddenly becomes green, which doesn't sound very likely. That could take a very long time, because as we said on Friday's podcast, Scott Morrison, their PM over there, still wants to dig out coal and sell it. But he wants to use things like carbon capture and other mechanisms to clean up the mess they continue to make.
It doesn't surprise me that he's setting his store with unproven technologies because, as you say, it's delusional. He doesn't want to change.
Not holding back with their words. That's Lucy Siegel on last Thursday's podcast. Go back and listen to that edition of It's the Business. We've got a great week ahead, by the way. On Brexit, we'll be talking to economist Vicky Price. I might ask her what she thinks. Is she excited by this deal with Australia? She's going to be on Wednesday, and tomorrow the state of the travel industry, or a state of dismay probably for the travel industry, isn't it? With the Independent's travel writer Simon Calder, he's going to be joining me. And on Thursday, Sainsbury's earnings results, talking about retail, which we will be shortly. Their earnings results are out on Thursday, and we'll be going to looking at how retail is adapting to a post-COVID world, including the CEO of MishiPay. He's going to be joining me with one of those technologies where you can walk out of a store, like at those Amazon Go stores in the United States. You have to pay, of course, so you just don't check out. You can pick up what you want, scan and go. I'm going to ask the obvious question about, how to stop people just pretending to scan and walking out without paying for something. Now, speaking of China, which we were there for a second, there's a story in the FT today that shows that Chinese companies, I wonder how this is going to work out. Chinese companies have raised $11 billion this year on the New York Stock Exchange and on the NASDAQ. A lot of it via initial public offerings and also follow-on share sales. It includes a $1.4 billion IPO for RLX Technology, which is an e-cigarette maker. Well, they do like to smoke in China. I guess if they're going to stop smoking, they're all going to go on to e-cigarettes. And $947 million for the software company Tuya, which writes code for linking together devices on the Internet of Things. Who came up with that name? The Internet of Things. Why the Internet of Things? Why not the Internet of Stuff? Or the Internet of everything we can possibly think of sticking on the Internet, whether it's going to be useful or not. Too big an acronym for that one, perhaps. Or the Internet of endless new hacking opportunities, which is probably more realistic. Or the Internet of gadgets for people with too much time and money on their hands. Take your pick. Any of those, but we'll stick with Internet of Things for now. But the point is, we've got all this Chinese money going into all these new investments on the US stock exchanges. All this Chinese money being raised on US capital markets, which now supposedly should be audited by US authorities by law, and yet China, by their own laws, are saying they're not in support of it. It's prohibited by China. So let's see how that unfolds, because the US, of course, has already delisted a few Chinese companies. So people putting money into these new companies, you'd assume if they are forced to delist, then the price the shareholders will get back will be somewhat discounted. It would be a bit of a fire sale, I would have thought. Meanwhile, one of the themes on the markets around the world this last week has been, have we all overestimated the speed of recovery? The reflation trade, as they call it, has perhaps been put back on hold for a bit. Although on Friday it looked like it was all guns were blazing in the United States. But let's get a take on all of this from our shares guru, Rodney Hobson, author of many books on the share market, including Shares Made Simple and How to Build a Share Portfolio, and many more. I think I've previously said he's written almost as many books as Catherine Cookson. He's now taken that, I think, as a target because she's dead and he's still going. So maybe he'll beat her target. Look, he is on It's the Business every couple of weeks, and it's one of those weeks. So, look, he's with us. Rodney, the FTSE 100 fell over 1% last week, which is not a huge amount, but it finished the week before just over that psychological 7,000 barrier, which is the first time it's been there since the pandemic. So what happens now then? Does it sort of waver around that line for a while, or does it break through? And if it breaks through, where's it going to stop?
Yes, the last time we were at 7,000 points, we were going in the wrong direction. We had that dramatic drop in January, February, March last year when we fell from about 7,004 to down to about 5,000 points. Yes, so when it moves, it moves. But we're talking about wavering along the line, and I'm going to waver uncharacteristically today because, the market does tend to swing a bit too far and then correct itself. Yeah. And I think that's what we've got with the FTSE. As you say, we did get above 7,000 points. We got to 7,019 points, which was a lot more than people thought we were going to get. We were up about 500 points from this year's low, so that's pretty good. But I think we swung just a bit too quickly. We raced through, and there's a lot of things that do hold back the London stock market that you don't get in America, for example. We don't have the big technology companies quoted here, and those are the ones that have really shot away in New York, whereas what we've got is very heavy into resources such as oil and commodities. We're very, very heavily into financials, and these are the companies that haven't really taken off, where there's still some worry that they're affected by the recession. Yeah. And so I think we were a little premature in getting above 7,000 points last week.
And a lot of those companies, of course, are serving multiple markets as well. They're not, there's more of a domestic orientation, obviously, in the US. There are international companies as well, but the domestic market is more important, whereas proportionally speaking, the domestic market here for a lot of these companies is less so, isn't it? So actually how the rest of the world's doing is perhaps more important than how we're doing. So we might be getting the vaccine, but if it's not happening everywhere else, then you get that delay to the recovery, and they suffer as a consequence.
Yes, indeed, that is true. And although China has bounced back pretty well, we still have the question mark over China because so many countries are now getting very uneasy about China flexing its muscles militarily and the human rights issues. So China, yes, possibly, but we may see that market cut off for a lot of Western companies. India is a real spread of pandemic there, come back again, and Europe we're into the third wave. So there's a lot of areas, yes, where we're not going to bounce out of recession yet.
Now, what about the FTSE 100 versus the broader share market? So if we look at all shares in the FTSE, they're up 3.2%, which is slightly more than the FTSE 100, and they are closer to their pre-pandemic peak than the FTSE 100. So where from there then? Is it going to be bigger companies versus smaller companies? Which is going to grow fastest from this point, do you think? Given that you can't waver on the line on two things, Rodney.
No, I'm not going to waver on that. I think that what has happened is, funnily enough, the smaller companies turn faster than the bigger companies. We all watch the FTSE 100 and think that's leading the way. It doesn't. The FTSE 100 follows. And so smaller companies do get moving. The share prices get moving faster. It happens at the bottom. It happens again at the top. And what has happened here is that the FTSE 250, which are the second slab of shares, often those the mid-caps, they have moved up much faster. They are, in fact, at a record high. They have completely recovered from the fall, and they're much more domestic stocks, and they've been boosted, of course, by the fact that we've got the vaccination program rolling out here faster than any other major economy, even the United States. And so that index has bounced back. Now, I think if we look into the future, you can't look back and say, the FTSE, the 250 is doing better than 100. That's in the past. What is going to happen now, I think, is that the FTSE 100 will make up the territory.
It's just a question of when, isn't it? How quickly? Because if we look in the US, for example, which has been breaking new highs week after week, I mean, they've lost their mojo. There's not much momentum in the US share market at the moment because I think because of the same question, isn't it? How quick is this recovery going to happen? Maybe we've overestimated the speed of it.
Well, we may have done. It's hard to say, but I'm very optimistic. I think that the FTSE may well get into new territory. We peaked around about 76 mark on several occasions we have done over the past 4 years. We're still behind where we were in the middle of 2017. So we've still got a lot of ground to make, and I don't see why that ground can't be made up, especially if we do get the economy moving again. Certainly, I think we're a much better prospect than European stocks.
Yeah.
European stocks have bounced back much better than we have, and I can't honestly see why, because we've got the third wave of the pandemic there. They're much slower at rolling out the vaccine than we have been. This seems to be rather odd. I wouldn't invest in European stocks at this stage. I think they're now overpriced. American stocks, you can argue, well, it's a big country and it's a global country, and they are getting their vaccines rolled out at last, and I think they're getting on top of it. But Europe, I think, is a problem. So to me, I think the FTSE 100 is going to have to start moving because it's fallen behind in many ways unfairly.
Well, of course, the US has got, I mean, you mentioned the FTSE 250 being back above where it was. I mean, we are, so with the FTSE 100 was around 7,500, wasn't it, in early 2020? So that would be like a 7% or so increase from where we are now, which sounds like a lot, but I mean, we're up 3% in the last month. So it's all, you know, if we look at, if it was to carry on, if we ignore this blip, this slight hesitation this week, if we were to carry on, it would only take, you know, at that same rate, it would only take, a couple of months for us to be back where we were.
Yes, it brings us back to the point you raised right at the start, that if we break through this 7,000 psychological barrier, and really there's nothing magical about 7,000 points, but it's a round figure and people tend to look at it. And I think, yes, if we broke above 7,000 points, I think we would shoot away. I think we would get to 7,500 points again in pretty short order. And then we're looking, once we get above 7.5, then maybe we will pause for breath again.
Well, domestically, I mean, we can expect, I mean, you know, it's a bit sad about the rest of the world, but if we're all vaccinated, then, you know, companies that have got a domestic focus should be doing quite well. I mean, God, just look at how busy the pub beer gardens have been over the last week. Everyone is actually quite desperate to get out there and get life back to normal. So, I mean, for domestically focused businesses, this should be a good summer.
Yes, we have this odd thing, the effect of the pandemic, is that some people who've got money and been able to continue earning haven't been able to spend it, so they've got a slab of money. You have a lot of people who've suffered badly during the pandemic, often the people who were short of money in the first place, are now desperately short of money. But that welter of money from the people who've done well out of the pandemic and saved up, I think it is going to hit the economy this year. When I say hit, I mean the avalanche will come smashing through. I think we will really take off. Yeah. I see that, in fact, forecasts that are collated by the Treasury, they tend to ask large finance companies what they think is going to happen. And forecasting the economy is a seriously difficult business. You really are setting yourself up to fail. But suggestions are rising We were suggesting about 4.7% this year in last month. We're now thinking that the economy could rise by 5.7%. I think it could very well rise more. Some economists think it could rise 7%. And I'll stick my neck out. I think that between March and, so the first quarter of this year, we can write off. We were down about 1.5%, which wasn't bad at all in the circumstances in the lockdown. But I think we'll bounce back 7% between March and December, or the equivalent thereof.
Yeah.
So let's take the end of March to the end of March next year, up 7%. I'm going to stick my neck out and say.
Well, I think you're safer with that.
Good news.
Yeah, safer with that one. Absolutely. Though you're almost becoming an economist now. You give me a number that no one's ever going to hold you to, and you can always change it if it's wrong. That's what they do, isn't it? But the big concern, obviously, in all of this is if it grows too quickly, is that inflation picks up. So we had and we talked about this on the podcast last week. I think, and I was just talking to myself on this one, but the fact that inflation was at 1% for the 12 months to March, there's been fears of rising inflation around the world. 1% obviously is a long way off where the Bank of England starts looking at raising interest rates, which could be years away. But inflation is still being talked about a lot, isn't it? And that 1%, the interesting thing is, that's what's the consumer price index, but the producer price inflation, the PPI, goods leaving the factory for the year grew 1.9%, and actually the price of materials, because of all the delays in getting stuff shipped around the world and lack of supply, the materials and fuels used in the manufacturing process grew 5.9% for the year to March. So all of that could, at some point, particularly oil prices, of course, if oil prices go up, that can pass through to inflation. So that's the one thing that could perhaps slow down the speed of recovery if people get fearful that their interest rates are going to rise and they look at how much they've got on their house mortgage.
Yes, well, I'm glad I didn't make any forecasts on inflation, because I would certainly have been wrong. I would have expected inflation to start taking off long before now, and it is sort of defying reality in a way. But somehow inflation is staying down, and that really is good news. It's not only good news for people who struggling to make ends meet, but it's also good news for the government, because it means the massive borrowing that the government is conducting at the moment, the odd 300 billion added to national debt over the past year, it means the government can borrow at lower interest rates than it might otherwise have done. But I think you've hit the nail on the head when you're talking about oil price. There are two major factors here. One is the oil price, because that feeds through into everything. If energy costs rise, if the cost of moving goods rises, then inevitably it seeps all the way through the economy. And I think there is a lot of inflation stored up because of the lockdowns we've had. There's enormous pressure on companies to try to hold down prices, which I think they've done fairly successfully. But yes, the inflation could be coming through, and that could make a difference. The other factor to watch out for is the strength of the pound, because oil, as you know, is denoted in dollars. If the pound rises against the dollar, or holds up pretty well against the dollar, it keeps the price of oil down a bit for us. Yeah. So that would certainly help. But inflation is something that, yes, we do need to watch out for. I'll give
you an insight into the Dobby family. We were sitting in a traffic jam yesterday for the first time, I think, since forever. We've been sitting in a long line of traffic. And I was just saying to my wife, and you could just see the eyes rolling back in her head. I said, all these people driving the cars, I hope they realise that it's going to push the price of oil up, and that means their mortgage is going to cost more. Maybe they should think about that before they get in the car. And she was there going, oh, God, here we go again.
Well, fortunately, you've asked me to say these things, so
yeah, we're all right.
I don't mind saying. There is just one thing I would say, that if we do get inflation start to race away, then you need to be invested in shares, because they're the best hedge you've got against inflation.
Yeah, absolutely. Yeah, make sure you're getting your tax-free break on your investments, and make the most out of that 20 grand that you can squirrel away. So look, Sorry, I'll let it. What were you going to say?
No, I was going to say yes, indeed. And as I mentioned the last time I was on this podcast, at the start of the financial year, that's when you should be thinking of investing your £20,000, assuming you've got it, of course.
If you've got it,
that's when you should get in. Don't leave it to around to next March. You're wasting your time. And in fact, since I think shares are going to recover well during the summer, now is the time to be getting in.
Exactly. Do it now, before the recovery and before inflation starts to kick in. Absolutely. Hey, just one thing to finish off with. You wanted to talk about women chief executives and how there's not many of them. There's only a few, aren't there? If you look in the FTSE 100, I think there's people like Emma Walmsley, who's the CEO of GlaxoSmithKline. Carolyn McCall is at ITV, but I think ITV's come out of the FTSE 100 now. You've got Liz Garfield at Severn Trent as well. But there's not many of them around. There's a few senior executives, not many CEOs, which is curious, isn't it? Because time and time again, we have seen research showing that companies that got women at the top actually seem to perform better.
Sometimes women do perform spectacularly well. They often get landed with being chief executive of struggling companies because the men are less keen to have the job, which is a dreadful thing to be saying, but I'm afraid it's true. So sometimes women do fail spectacularly, and not their fault. It's simply because they've got hold of a lousy company.
They've been handed a poison chalice.
If they manage to turn the company round, of course, then it's a really spectacular success. Kate Swan at W.H. Smith is one I often quote, and that's quite a few years ago now, but she was spectacularly successful. But what is interesting, what's cropped up this week, is that there's no retailer among listed companies, and I'm not just talking about the FTSE 100, no retailer among listed companies that has a female chief executive. Wow. Now, when you reckon that even in this day and age, about 80% of purchases are still made by women, you might think that it's about time we had women running companies. You think that perhaps women have more idea what the shoppers want. It's a bit like kitchens. You know, the world is full of kitchens that are designed by men who never cook. I can't help thinking that if we got more women in charge of retailing, it may be just what we need out in the high street, because something clearly needs doing while the retail sector is being hit so very hard.
Now, before somebody goes, listen to this, a couple of middle-aged men talking about women are doing all the cooking and all the shopping, we're not saying that it's right. We're just saying that it is. I mean, you can't deny the facts that women are. I mean, you walk around the shops, it is largely women still in the supermarkets.
Phil, don't be a wimp. Let's tell it like it. Let's tell it like it is.
We're going to hang up this phone. I'm going to deal with the consequences. You're just going to swan off for a couple of weeks and come back again. That's why I'm trying to protect my back here. That's what I'm doing.
Well, I do understand this. I always speak as it is rather than whether I'm in favour of it or not. I mean, the same way that I always talk about issues around Brexit without any thought about whether I'm in favour of it or not, is how it is now.
But your point, I think your point stands absolutely. If you've got retailers that are run by men, whereas most of the customers are women, certainly well over 50%. What's going on? Because you'd assume that women will have a clearer idea. Absolutely with you on that. And then on top of that, you've got companies that are doing well anyway, who are run by women. And the interesting thing I think as well is I mentioned Severn Trent. There's a company that does very well in surveys for the environment, for social performance, for ethical performance, all those things that men aren't terribly good at because they're just a bit alpha male-ish, whereas women are better at this sort of thing, and the world is certainly heading in that direction, and the performance of companies is going to do better because we are going to be looking at the ethics of companies more, and women probably are going to be steering a more reputable ship in that direction.
Yes, I think women, and it's a generalisation, and because there are loads of exceptions, but as a generalisation, I think that women are more conscious of green issues and conscious of issues that affect the planet. I think that is true, and they see that perhaps women shareholders need to be buying up these shares, and when we're allowed to go to company meetings, annual meetings again, to go along and berate the white chairman.
Yeah.
So there we are. Don't take it out on us ladies. Go along to the annual meetings and take it out on the chairman.
Sounds good. All right. And tell him Rodney sent you. Good to talk, Rodney. Yeah. Catch you again soon.
Okay, fine.
Look, we can expect to hear more about Dominic Cummings this week. The Times today leading with Cummings still in frame as lockdown leaks rat. He obviously hates the Prime Minister's wife. So maybe it's jealousy. Maybe he wanted to be involved in every part of Boris Johnson's life, but even the bits that Carrie does. But on the leak of the September lockdown before it was due to be announced, that's all this is all about. In his blog, Dominic Cummings says that the evidence seemed to be pointing to Henry Newman, another special advisor to the PM. There's the problem right there. Someone else who is an advisor. I mean, you've got Cummings. What else do you need? Get rid of him. Cummings says in his blog, if Newman is confirmed as the leaker, then I will have to fire him. This is what the Prime Minister said. And this will cause me very serious problems with Carrie as their best friends. Perhaps we could get the Cabinet Secretary to stop the leak inquiry. That's what Dominic Cummings says the Prime Minister says. In this leak, which he leaked on his blog. I tell you, hell hath no fury like a PM advisor scorned, does it? More leaks in other newspapers as well. The Daily Mail has a quote, Boris let the bodies pile high in their thousands. That's another thing that Boris has supposedly said by the Prime Minister ahead of that third lockdown, after Michael Gove warned the PM that soldiers would need to guard hospitals overrun with COVID victims if they didn't go into another lockdown. It's all getting very ugly, isn't it? Then, of course, you've got the flat renovation as well, with the Eye saying PM facing tax issues over flat renovation. The HMRC wants to know where the £58,000 came from, which he supposedly says, well, he paid it himself. So I guess they want to know if someone paid him to pay for it, then that was income, and so he'd have to pay tax on that money. He obviously hadn't thought that one through. The Guardian lead with the outrageous number 10 rules out an urgent inquiry into pandemic mistakes. The Guardian is saying they're too busy right now to divert resources into an inquiry. There does seem to be this all-out war, doesn't there, against the Prime Minister? Is someone trying to get rid of him? And who? And who would replace him? Please, not Rishi Sunak. Although, you know, if we're looking for a man who's actually got less charisma than Keir Starmer, there he is. But I do have a bit of sympathy, unusually, for the Daily Express headline in all of this. For Britain's sake, get on with the job. Yeah, well, there does need to be an inquiry, and maybe then we can forget about covering it on the front page of newspapers every day until we actually know what was said by who, and how implicated is Boris Johnson in whatever he's said to be implicated in, apart from saying a few tasteless things, which, you know, wouldn't be the first time for Boris. And Little Britain in big bold type on the front page of the Daily Star today. This is shocking and funny, but it's shocking. Sacre bleu. Yeah. Beat EU to it. Britain bags 100 million first dibs deal on French vaccine despite Eurojab's chaos. We are front of the queue for the Valneva French vaccine. This is a shocking front page, gloating over European lives. It's not funny, actually, is it? It even has a picture of Rene from Allo Allo, just to maximise the stereotyping. I mean, they do realise, don't they? Agincourt was 700 years ago. Could we move on a bit now, please? We talk travel tomorrow. Simon Calder is going to join me. Maybe the loss of the travel industry isn't going to be important to us. If you look at that newspaper front page, clearly we don't want to go anywhere because we're British. What's wrong with Southend? That's it for today, though. See you tomorrow morning.
It's the Business with Phil Dobbie. Listen online at itsthe.business or wherever good podcasts.